It's Sunday here, and we're looking forward to a new week coming up. Markets open at 5 o'clock Dallas time. Taking a look at some of the strategies in the portfolio, we have Cobra III, 5-minute. And I like to continue to validate and research my strategies and see if there's different ways and better ways to do things without curve fitting, without changing something too radically different. But I always like to test, and haven't done a test in a while on all systems, or actually on all markets. We're just testing one system on different market stock indexes to see the results. I'm going to show you what I found this weekend. And I've shown you this before on the E-mini S&P. So you've got Cobra III E-mini S&P. We normally trade it on the 5-minute chart. Excellent system. Last September, this made a run. This is without slippage and commission. Made a run from here to it's at trade 290. 12,400 all the way up to 23,500. So about $11,000 on 54 trades, and so about $200 a trade on average. And so really good run last fall. And so we're in a drawdown here. It's a decent sized drawdown, and the markets have been choppy. This market. This strategies like this don't do well when the market doesn't trend, or it's constantly reversing or chopping in the middle of the day. It needs a day trade trend, and so you see the results going back 5 years. This actually tests well back to the beginning of the E-mini S&P, and it's a strategy that we've had since the current version since 2009, but originally developed this back in 2005, and so it looked a little weak here, and then it took off, and so we experienced the same thing here. This weakness is a bigger drawdown than this weakness, but I'm excited about the possibilities, and so I'm going to show you another pattern here in a minute as to why I think this isn't working, and I'll show you that here in a minute. But it hasn't worked since the end of January, so keep that in mind. I'll show you a pattern that has worked well since January that doesn't work well usually. And so take a look at the 15-minute version, same exact parameters, a really nice equity curve. The results are even better. Average trade profit is 70, and the 5-minute version, the average trade profit is 54, and so you get much more improvement. Very low drawdown. You get a higher net profit. You take some more trades in here because you're trading the next bar, and on a 15-minute bar you have more time to trade the next bar, another 10 minutes, and so you take some more trades in here. 418 trades versus 387, and so I really like the results of the 15-minute chart, and it's in a pretty good place to transition. You're in a drawdown. The drawdown's not as big, but it's still near a worst case cyclical drawdown for this time period. And so it could be a good time to trade this on 15-minute charts. If you have the 5-minute version, want to trade the 15-minute version, you can do that. The 1-minute version has a nice equity curve as well, and it's actually making equity peaks. And so if you scale down to the smaller time frame, going back since last fall, it's still making equity peaks. It struggled in this period right here, but it's come back on a smaller time frame, and so it's actually got a higher average trade profit than the 5-minute. There's one parameter that's different. We look for a average range of 1 point instead of 2 on the 5-minute. In the 15-minute, we look for the average range of these bars to be at least 2 points. But on the 1-minute, we just look for the average range to be at least 1 point. And so that helps make sure there's some trend in it, and not just a very narrow range. And so basically you change one parameter based on the bar size, average bar size, and you get really good results on the E-mini S&P 1-minute, 5-minute, 15-minute, and those are what I've tested. Look at the Nasdaq 15-minute, really good results as well. So it works, and we change the average range because the Nasdaq trades in a higher point value, so we've doubled the average range. So we want it to be at least average range of 4 points. And $60 average trade profit, which is 12 points in the Nasdaq. Nasdaq ticks in $5 increments. Actually, each quarter point is $5, while the full point is 20. So 34 points, but is 12 ticks of profit on average. And again, these aren't including slippage and commission. And then we look at the 5-minute chart, and the results aren't as good, but it's still a good equity curve. And then the 1-minute chart, bit choppier on the Nasdaq, so it doesn't work as well. And then we look at the E-mini Dow. Pretty good results on the E-mini Dow. It's in a pullback as well. And see, the average trade profit is 34. The E-mini S&P, Nasdaq definitely work better, but I like to validate things on other markets. So this is, the results are upward in the equity curve, so it can validate other markets. You may not necessarily want to trade the mini Dow, but the fact that it does work well in the mini Dow is meaningful. Here it is on the 5-minute time frame, and then on the 1-minute time frame, you can see those results as well. So I prefer to trade the 5 on the E-mini S&P, the 1, 5, and 15, and on the Nasdaq, the 15. And overall, because these work well on the 15-minute charts, you can trade them on the E-mini Nasdaq, E-mini S&P, and E-mini Dow. And tomorrow, I will show you this on the DAX and E-mini Russell. I have that on multi-charts on my other computer setup here, and so I'll show you that later. But I want to show you some open code now for a strategy that I've been watching, and it's been working well since February, which can explain. It's kind of the opposite, very counter trend. It's kind of opposite of what we do with Cobra. I mean, not opposite as far as code logic, but just the type of strategy, trend versus counter trend. And so I'm going to show you that code now. Pause the video, set that up, and show you how that strategy's worked since these strategies have gone into a drawdown. So take a look at the results of the strategy that I'm talking about that works really well. Worked really well this week. You see, one of the things I see is a gap down, continue, and then reverse. Gap down, continue, and reverse. Gap down, didn't really continue that gap down, but it reversed. And so sometimes, you know, when a gap continues and then reverses, it's very hard to trade by traditional methods, because typically we buy a gap down if the conditions are right, and then the market doesn't usually go down 10 points or we're stopped out. But if the market if the market gaps down and it continues, then the trend is down, so then maybe we short it at some point along the way. We short the rallies, but this thing gaps down and then reverse, just makes a V pattern and returns to the previous day's close. And so it's hard to trade unless you just straight out buy the dip after a certain number of points. And so super easy code, 3 lines, buy next bar at the previous day's close minus 10 on the S&P. And so if you have 10-point stop loss and we set exit on close yesterday, or on Friday, this would have hit the stop loss and then got in again, and then got out at the end of the day. So very, 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 very basic. I first looked at only getting in if there is a gap down of 5 points. That's why this code is commented out here. But there's no need to do that. You just buy the previous day's close minus 10 points ever since February the 8th, and you're making a great return, $11,000 per contract in what, 4 or 5 months, 57 trades, 193.20, and 1875 drawdown. It's pretty good. Doesn't get much better than that. That's a short-term pattern, but the catch is, how would you have known to do that? How would you know that this is a great strategy to trade? Let's look at how well it works 5 years back. So if we go back 5 years, it doesn't do terrible. 978 per trade without slippage and commission is going to be a loser. But this isn't a strategy that you would typically want to trade. What about the gap down version? If we take out the gap down, or if we add the gap, what would it do? If it gaps down 5 points, then by the next bar at the close minus, previous day's close minus 10. So we add the gap requirement back in, and then we click on the confirm, and let's wait for the results to update. So it's still not great. You see systems like this that they're not a great. It's not a great system, and then all of a sudden you get this move up, and you say, well, is this the beginning of something new? To me, this gives me confidence that the systems that have worked for many years have the best chance of working now, after this a strategy like this has done so well. It's so rudimentary, so basic. So I mean, I can imagine that just buying every 10-point move down will work now all of a sudden, and then the market just will return to the previous days. Will run up like this, and so very rare pattern, and it's possible that anything could happen. And who knows? This could make be the best winning strategy, and the S&P just goes up another 500 points, and which I think it can, but not just based on this pattern. I don't think just buying every 10-point dip during the day will work, but it could. And so it's something we have to watch for. Testing the validation of your strategies by looking at what's breaking them and the history of what's broken them, and why that pattern is doing so well all of a sudden. So so those are things to look at, and I wanted to show you that information, the way I analyze systems. I not only analyze systems, but opposite systems or systems patterns that I notice. If I see patterns emerging in the last 3 or 4 months, how much validity do they have over the long term? Yeah, this is a great system going back to February the 8th, and I mean, amazing results. But if you look at this on the 5-year chart, are you really going to trade this? Most people would not, but you know, I guess you could, and it may work out. But I prefer to trade the strategies that have worked well over time, and understand that maybe those systems aren't working because a strategy like this is working so well, and market movements like this are not typical, and so it's just a matter of time before um, more normal markets trade, unless markets change forever. And the more the Fed is involved in the markets, the more changes there may be, the central bank. So that's the update. I want to offer you these. I have a special offer on this Cobra III pattern. Great time to get in. Once again, on this, you can get the 15-minute, the 5-minute, the 1-minute, and you can get all these for all markets. We don't have any bar interval or market limitations on this, and you can get this an annual lease offer for just $497, and I'm going to make that available below this video. And I'll also show you the results of the DAX and the E-mini Russell coming up, and I'll make that offer available this week. This is the first of videos to talk about this special offer. For an annual lease, you get an annual lease for $497, all markets, all bar intervals. So you get a multi-system, multi-market approach for the stock indexes that you can trade. Start trading right away. It has lots of history and is a good place to start. So let me know if you have any questions on that.